Hello and welcome back to the channel. So this is going to be a video on the Bitcoin halving. For those of you that don't know what this is, that's what I'm going to go through. I'm going to explain how it affects Bitcoin and just the basics of what it is. I'm also going to go through what the other halvings are as well, not just Bitcoin, and how they also impact the market. So currently, as of right now, this is actually the second take of this video, by the way. So in the first take, the timer actually said it was 19 days. For some reason now it says it's 20 days. And this is exactly what I said in the last video as well. You've got to understand that yes, this timer on nicehash.com, so this is the one that most people will use to search up the countdown for Bitcoin halving, is fairly accurate, but most of the time it's not really. Because they basically take the remaining blocks, which would be obviously 840,000 minus 837,084. And they basically just minus them and then just times it by 10 minutes because they assume that the averaged block time is 10 minutes. Which is fairly accurate to calculate, but sometimes blocks can be way longer and way faster. I have seen some Bitcoin blocks that take about 50 minutes, which is ridiculous. So firstly, to understand what the Bitcoin halving is, we need to understand what is a block. So you have something called the block height. So this is the block height when the halving will happen. The halving happens every 210,000 blocks, which is actually also written further down here as well. We are not too far away right now in terms of how many blocks we are away. But first off, what is a block? So when you take miners who are mining Bitcoin, they will pull together all the hash power and then they will mine the block. And when the block is mined, they receive a reward for mining the block. They will receive 6.25 Bitcoin as of right now, and they will also receive transaction fees on top of that. And what will happen is that it's distributed between the miners. Let's say there's 1,000 miners and they receive 6.25 Bitcoin per block, and also the transaction fees of that block. That's how much they would receive. So that's the first thing to be aware of. Right now, as of right now, so once the halving happens, the Bitcoin block reward will be halved, which will go down to 3.125. And so this is how the Bitcoin halving has an impact, though. The Bitcoin halving has an impact on the price purely because of the fact that if the supply goes down and there's less supply coming into the market and the demand remains the same, the price tends to go up. Obviously, the past is not an indication of future performance, so do not rely on, the halving will make the price go up. It doesn't work like that. But normally, most people seem to think that that is how it works. And previously on the chart, if we go back, after the halvings, usually the price tends to go up. So the halving was around April over here somewhere. April 2020, the price starts to creep up, and then that's when we start rocketing off. That's normally tends to be what happens. This does take about 18 months to hit a top, by the way. And it's not always 18 months either, so you need to be wary of that too. So as of right now, the amount of blocks that are remaining, once the blocks are mined, the Bitcoin halving event will occur. So hence, it's not really like something special as an actual event. Nothing's actually amazingly going to happen. It's just on the blockchain. The amount of Bitcoin that we give into miners gets halved. And the interesting thing about this is, I'll tell you a funny story. I have this one friend who, let's not call him stupid. Let's call him just silly. He seems to, for some bizarre reason, he thought the Bitcoin halving was when the price halved, which is just, if anybody else thinks that too, please don't think that. That is wrong. That is absolutely wrong. Because if that was the case and the price halved, that'd be easy to trade. You just buy it when the price halves and then just sell it once it's gone up. You can't do that. It doesn't work like that. That's not what it is. It's the amount of Bitcoin that's coming into the market is halved from the blocks. Now, the reason why the supply halves is to, counteract against inflation. So there's less Bitcoin in the market and there's less coming into the market, and hence the price continues to go up. Satoshi, which is a maker of Bitcoin, nobody knows who that is. I might do some video on explaining who made Bitcoin. But basically, it was a long story short, it was either a group of people or one person, and nobody knows who it was that created Bitcoin. But yeah, that's just the basics of what to know about the halving. So you actually have more than one halving. So you've got the Bitcoin halving, and you've also got other halvings. Now, we're just going to go for the Bitcoin one for a couple of minutes, and then after that, I'll go through a couple of the other halvings as well. So, the interesting thing when you come to the Bitcoin halving is, as the supply that's coming into the market, so the block reward over here, right? Once this starts getting lower and lower, so every 4 years it's estimated that it goes lower. Once it starts getting lower and lower, it might go down to 1.6 or 1.5 point whatever, right? And then so on, it gets halved and halved and halved. Eventually, the max supply of Bitcoin is currently 21 million. And obviously, it's said that quite a few of the coins are lost, but there's currently about 1.5 million-ish left to be mined. Once all of those coins are mined, the block reward changes. Obviously, there will be no reward. You can't have more than 21 million Bitcoin. There will only ever be 21 million and 50 Bitcoin. 50 Bitcoin was the Genesis block, which was mined by Satoshi, and that is unspendable. And then you've also got the 21 million remaining Bitcoin, which is how much that we would have. And then obviously a lot of that's been lost, and some people, might have either died with their wallets and never gave the codes to anyone, never gave the keys to anyone, or like, there's a lot of stories to that. But the amount of Bitcoin that will be left, obviously, once all the Bitcoin is mined in 2140, that is when it will come to a point where the block reward will be zero then. So miners will only receive rewards through transaction fees alone, instead of receiving the block reward and also transaction fees. So as of right now, for anybody who was thinking about mining, it is getting more and more expensive to mine, purely because of the fact that the more the more the reward goes down, you don't make as much money anymore compared to what you used to make, and hence normally around the halving time, people will sell off the miners and then just buy some Bitcoin, and that's normally what people end up doing, purely because of the fact that it's not profitable to them anymore. Like for individuals back in the day, it was quite profitable, but nowadays it's mainly just big companies that will mine, and that's who actually have a profitable chance at making some money. Places where it's cheap electricity and they can mine freely, and they have obviously the money to set up like a large sum of miners so they can mine a good chunk of Bitcoin. Those are the people who mine the majority of the Bitcoin, then they'll come onto the market, sell it, and then obviously the more is released into the market. And obviously when the amount that's coming into the market is reduced, not as many people are able to get the Bitcoin that they want to buy, and hence the price will obviously start creeping up. The Bitcoin price does not rely completely on buying and selling. Longing and shorting also does affect it to some extent, purely because of the fact that if somebody is going short with a large sum of money and they are liquidated, once they are liquidated, in order to close their sell order, which you'll see that was a short order, the Bitcoin will be bought, and that is why the price creeps up. So once they've been liquidated, Bitcoin will be bought, and then obviously, that is what causes the price to creep up as well. So there's other factors that also affect the price. The halving is something that a lot of people who do know what it is, and maybe the newer people who know what it is, they rely quite heavily on, purely because of the fact that after the halving, usually 18 months after, the price normally goes to a top, which is normally the highest price it will go within that cycle, because you have Bitcoin cycles. So from my understanding, so you can have multiple in a Bitcoin cycle. You actually have it's 4 years long. Let's say 4 years. The first year, so we'll just put 1, 2, 3, 4. So our cycle ends basically when the halvings happen. So if we say the halving happens here, so this would be 2024. Let's say our halving happens there. Then we start our new cycle. Our new cycle will be 2025 over here. 2025 would be where we start creeping up our prices, and that's what normally happens. It's obviously not an indication of what will happen. Obviously, it's not financial advice. Obviously, do your own research. But normally what will happen is, obviously, in 2025, the price will go up. So this is something known as the bull year, in my opinion. 2026 would be the bear year. So once, obviously, everybody's bought the Bitcoin, people need to sell it, so there'll be a bear year. And then the third year, which is currently what we were in previously, This is, I just like to call this consolidation year. Basically, we just sit and do nothing for a while. And we basically just slowly creep back up to all-time high, which is exactly what's happened. So that's how the cycle tends to work. And you can see that on the chart over here. If you go back to 2020 over here, so the halving happens over here. This is 2024. We start running up, and then we get to about 20. Well, no, this is 2020, but it's an indication of 2024 because it's 4 years forward. And then we get to 2021. We start creeping up, and that's our top. Well, that's not our top, but yeah, we move upwards, come down, move back up, and that's all in the same year. Once this year's ended, that's our top, and then we start our new year, we start dumping. Our year technically ended at April, but most of the time we actually peak off in November, which is 18 months after, November, December-ish time. So you move upwards, you come down, you move upwards again. Over here we set our top in one go, it just took a bit longer to get up there. But that's normally what tends to happen. We have, obviously, our halving over here, give or take. Start moving upwards. The new year starts, which the new year would start in April. This would be technically the start of our bear year. However, the prices don't start creeping down until a bit later. So we move upwards, come down, then the prices start creeping down. We have our bear year. Our bear year tends to end in April again. So if you move down to April, that's where our bear year ended in 2023. And then we have our consolidation year, or that's what I like to call it, and then we start moving upwards. And then obviously our halving is going to happen, that'll be 2024, and then we might start either going something like this, we start moving higher. We might have it like maybe a dip down to here, and then we start moving higher, and then after that there'll be the bull year, and we move higher than that. That's roughly how the market cycles tend to go. That's how they've gone for quite a long time. I don't know how far back on this chart I can go. Not far enough, so I can't really show any of the cycles on here. But that tends to be how the market goes in terms of cycles. They're not also 100% something you should rely on. Yeah, the cycles, for some extent, they do show what should be going on, but don't rely heavily on them, because unfortunately, the past performance is not an indication of the future. So that's just the Bitcoin halving and the Bitcoin market cycle, how I like to say it. So while most coins do technically follow Bitcoin, and a lot of people will understand that they do tend to follow Bitcoin, just be wary that obviously just because Bitcoin's going up, that doesn't mean other coins will also go up. I know a lot of people do think that will happen. That's not how it works. And also be wary that once the halving does happen, it's not 100% guaranteed the price can go up. Yes, previously it has, but it doesn't mean that that will continue to happen. So that's just something about the Bitcoin halving to begin with. Right, if we go back, this is all the other halvings that are currently available on here. So if we go through Ethereum, Ethereum used to have a halving. That's because it was a proof of work coin, which means a proof of work means basically you have to mine it in order to create more of it, in like baby terms. It was then remade, well not remade, it was upgraded, and it's now a proof of stake coin, and now in order to make more of it, you stake your ETH. Now, the other coins are also going to have the Bitcoin halving. Bitcoin Cash will have its halving in 3 days. This is quite interesting. For those who don't know what Bitcoin Cash is a hard fork of the Bitcoin network. I'm not going to explain what that means, but it's basically just something that has been created off the Bitcoin network. And as of right now, I think Bitcoin Cash is doing quite well. But yeah, prior to the halving, this is the Bitcoin Cash. It's also going to have its halving. Most halvings for charts do affect the price. If we take Litecoin, for example, Litecoin's halving was actually quite recently. As you can see, it was about 300 days ago. It was last August, if I remember correctly. It was August 2023, I think. Yeah, 2023. August 2023, that's when the Litecoin halving was. A lot of people got really excited about this, and the price didn't do anything afterwards. And this is a fair indication that obviously most of the time stuff does tend to follow Bitcoin on the chart, and you can see that on the chart. Most of these halvings are just, again, the amount of supply that obviously is coming into the market is reduced. Same with Bitcoin Cash, same with the Bitcoin, and same with all of these other coins that are here. The amount of supply that comes into the market is reduced, and that's what a halving is. So we have less of the coins coming into the market, and that's why people assume the price to go up, because of supply and demand, and that's why it tends to actually go up. But it's not something that you should 100% rely on, because obviously, again, while obviously you could sit here and go, right, well, I might as well just buy Bitcoin after the halving because that's 100% guaranteed to make money. No, that's not how it works. You can't buy something after the halving and just assume, oh yeah, it's going to go up. It does not work like that. Again, there's risk with everything, and you should only invest what you're willing to lose. But it's just something to know what the halving is. I was quite shocked that my friend thought that the price halves, which is just, I don't know how that could even make any sense. Because wouldn't everybody just short the price of Bitcoin and then you make money? Like, it doesn't work like that, obviously not. However, obviously the amount of supply that comes in does have. That does have some impact on the market to some extent, but do not rely on trying to predict whether that will have impact on the market. But I hope you guys enjoyed this video. Like and subscribe for more. If you have got any video recommendations, anything in particular you want to know, or any price analysis, any particular coin, please put it in the comment section either of this video or any video at all. I probably look through all of them, so yeah, and then I can do a video on that. I will see you guys later. Bye bye.